There we go. Like this green candle right here, that's an up close candle, right? So when you dealing with the market, right? Okay. When you're dealing with the market, right? Price goes up, right? Price goes down, right? When you see something like this right here, these two candles right there, when you see something like this right here, you got a green candle. It don't matter. It don't matter how big or small it is, right? You got an up close candle and you got a down close candle, and they're in the same range, right? Price, the algos like that because this is balanced. This is a balanced price range, right? The buyers had an opportunity to participate. The sellers had an opportunity to participate, right? The algorithms like that. That's balanced out to the algorithms. Everybody on both sides got an opportunity to participate. How many participants were there? I don't know and I don't care, right? But the algos like that, right? And then looking at that, that kind of looked like a guy with some big old eyes. That looked like Robinson. Hello, my name is Robinson. My name is Robinson. Hello. Right? So the algos like that, right? When we have situations like this where we got a red candle right here, right? We offer price to the downside. We got a green candle right here. Do this, right? So we got a red candle here where we offer price to the downside, right? We got a green candle here where we offer price to the upside. Then we got a green candle here. And then we consolidating to right there, right? Look what happened. Look what happened right there, right? You see what happened right there in this area right here between the bottom of that candle and the top of that candle, right? There is no sell side. There is no sell side right there, right? There's no sell side here. That's a problem, right? That's a problem. That's an imbalance, right? Um, some people call this a gap. ICT calls it a fair value gap. ICT calls it an imbalance, right? But people throughout the trading community, they consider that to be a type of a gap, right? That's a type of a gap. And that's a problem. The algorithms don't like when it doesn't look like Robinson's eyes over here. You see Robinson's eyes, you see how they look a little gleek. They look like they cocked like a pistol, right? You know what I'm saying? He's even drooling a little bit. He got a little bit of drool. He's drooling a little bit, right? The algorithm don't like when it don't look like Robinson's eyes. They want it to be balanced out. On you know what I'm saying, throughout all the price action. So what price does, what the algorithm does all day, every day, it seeks out an opportunity to balance the market. It seeks out inefficiencies, right? It seeks out liquidity, right? The liquidity is looking for liquidity and is looking for inefficiencies, right? Liquidity, right? True liquidity, right? I like to say true liquidity is going to be resting up under swing lows, right? If you don't know what a swing low is, right? Some people ICT call it swing lows. Some people call it pivot points. Some people call it a low, right? And what the swing low is a three candle pattern with candle 1, 2, and 3, right? Swing low, candle 2, right? Candle 2 right here. It has a higher low to the left and a higher low to the right. So that's a swing low. It makes a sound like That's what the sound make. No. It goes shirip. The swing low makes shirip. That's what it makes, right? So you have up under the swing low, right? Up under the swing low. I'm gonna draw a line under here, but it'll be right there. I don't want to put it through the number, right? There are sell stops, sell side liquidity, right? Sell side. Whoop, sorry about that. Liquidity. I'm not going to spell that all the way out. It's going too long, right? In other words, sell stops, right? So it's money resting up under liquidity, resting up under these lows. It's liquidity resting above these highs. Above the highs, it's buy stops or buy side liquidity resting above the highs, right? Put that back. And then when you have spaces like this right here, gaps, these are imbalances, right? These are imbalances. So all day long, the market is seeking out liquidity and it's seeking out imbalances. So little Pac-Man goes up, goes down, goes up, goes down, and is looking for liquidity and is looking for imbalances, right? Because it wants everything to be balanced, like Robinson eyes over here. They want the buyers to participate. They want the sellers to participate at every price point on this chart. All up and down this chart, these prices here, they want the buyers and the sellers to have an opportunity to participate at every price point along this chart, right? And then once it finds an imbalance, right? The market, once it finds an imbalance, you see the market comes over here, it goes up, takes out the buy side here, and you can tell it took out the buy side because once it went above the highest candle here, it wicked down, and then it wicked down, tried to get into this imbalance, right? Ricocheted off of it. This is a daily candle, so it probably hit something on a lower time frame that made it bounce off of it, right? And then we went over here, we handled some more business, but you see, we eventually came all the way back, and we eventually closed that entire imbalance in, right? Now, mind you, it's not when we close it in like that right there, right? We offered the buy side. Now we offered the sell side. Now that we've offered buy side, offered sell side, and now we're going back through it, right? Once we offer buy side, then offer sell side, this area has the potential to act as either support or resistance, right? This area, right? I'm just extending it out in time, right? Right, let me take this off. Take this off. Yep, there you go. So now we're just going to extend this out in time, right? And then when you extend it out in time like this, stretch it out in time, right? So once we came down and offered the sell side, now look what it did. It acted as resistance, right? And then we finally bust through, right? Wick back down. Once we wick back down, and then now over the last 2 days, we had power 3 days where we just cut through this area like butter, right? We just cut through it like butter, right? Because we used it. We offered buy side, sat on top of it like support, offered sell side, used it as resistance, right? Wick through it like that because why? Now this area is all balanced out now because Robinson's right eye got an opportunity to participate. Then Robinson's left eye got an opportunity to participate. And now it cut through it like butter. Wick. That's why it wicked through so fast like that day. Remember Monday when we opened up and we went up there and we reversed the whole day? Once we came up here and filled in this fair value gap, right? Now notice here, we had a fair value gap there, and we had a fair value gap here, right? Remember what I said, once we get opposing fair value gaps like that right there, that's a clue that that price range has been balanced out. You can like anticipate like, oh, this price range has been balanced out already. Why? Because we had a BISI on this end and we had a SIBI on that end. So that's letting you know when we come back here, we might cut through this like butter, right? And what did we do? We went straight to the top and went straight to the bottom in one day. And then over the next couple of days, we had some slow power 3 days where we just climbed to the top like that right there, because this area was balanced out. But now, that's all price does every day, all day. It looks for liquidity in sell stops and buy stops, and it looks for imbalances where everybody didn't get a chance to participate. And it may, on daily candles, it may take a long time to get back. But look here, you see, we got this SIBI over here, right? We had a BISI over here, right? Now this area, it's telling you this area is potentially fully balanced out. And look what happened when we went back through there again. Cut through it like butter. Why? Because the area was balanced out already, right? Does it do that every single time with the no, not every single time, but that's how you can start to learn to read the price action. Just look at the candles, just watch the candles print and see what is it looking for now. Are we looking for just pure liquidity in the form of buy stops or sell stops? Are we looking for inefficiencies in the form of gaps, either by fair value gaps, liquidity voids right here? Now these are ICT terms, right? You got volume imbalance right there, what I just circled. That's a volume imbalance over there, what I just circled, right? That's a volume imbalance right there. That's a fair value gap, right? Trying to see if I can see a full gap anywhere. We got a full gap in here. That's a full gap, pure liquidity void, right? These are all different types of imbalances, right? Those are all different types of imbalances. So the market gonna be seeking out liquidity in the form of buy stops and sell stops, buy stops, and it's gonna seek out imbalances. So you just watch the price print. You want to see Robinson's right eye green. You want to see Robinson's left eye red in every section of price. So if you see Robinson right eye, but you don't see Robinson's left eye, right, you can start to anticipate the market coming back and giving Robinson's left eye a chance to participate in this price range, right? And then once you see Robinson's right eye and left eye in that price range, then you start focusing on other areas that don't have his left eye and right eye. And if he has some drool, just give the little guy a napkin. You can give him a napkin. You know what I'm saying? It can be a napkin from Chick-fil-A. It don't matter. He like Chick-fil-A. Give him a Chick-fil-A napkin so he can go ahead and handle that little drooly drool that he got on his face right there. And I thank you. I yield my time.